To the ETF Inspector. It's Saturday, June 21st, right around lunchtime, and this will be the video for my personal trades throughout this previous week, June 16th through June 20th. Of course, it was only 4 trading days because June 19th was a holiday and markets were closed. So, update on the channel. We're up to 874. I actually think it's higher than that. Yeah, I haven't updated. 880. So we're getting close on the subscribers. And at ETF_Inspector1 on X, basically just lets you know when videos are coming out on YouTube. Other than that, I don't do a whole lot except for reposting yield max stuff. So, all right, let's take a look at how I did. If you watched the videos throughout the week, I let you know there was some excitement. So that'll be towards the end when I talk about spreads. But we'll start off with our 2 poor man's covered calls, that being purchase a leap, a deep in the money, long expiration call, and then use that to sell calls off of that, basically being able to sell calls on a stock without owning the 100 shares. Somewhat, I guess, I don't know if it would be considered a synthetic position or not, but probably not. But either way, so this one's on Intel. All right, and I had previously had one expiring June 20th for $24 strike. I went ahead on June 20th, closed that out, paying 2 cents. So I collected 26 cents a share, paid 2 cents a share to close it out. So that was the first part of the transaction on Friday. So I'm rolling them, but technically that shouldn't say roll. I have found that if I select a roll, they charge me the 68-cent commission on either side. But if I go ahead and just buy to close on my own and then sell to open on my own, I only get a 3-cent fee on the closing of the option. So if it's well out of the money, I'm not trying to make a quick trade or anything. You'll see I saved myself the 65 cents difference, and we're going for the most percentage we can, so every little bit counts. So I went ahead and I still labeled it roll though for some reason, but I went ahead and sold a 23, so I dropped it down a little closer, 10%, 10.5% out of the money, $23 strike for basically a month out, July 18th. 25% delta, and collected another 40 cents a share, or $40 minus the fee. And Intel closed on Friday at 21.08, so it's still decently out of the money. All right, I have another poor man's covered call on SOFI. This one kind of turned against me. It seems to keep on doing that, but it's okay. So I have my leap. The purchased call is a $5 strike. All right, and they're currently over $15 now. I was selling. I had a $14 strike on the last call that I had sold expiring on Friday on the 20th. I'm not up to date on my graying out here, sorry. But here, let's do that. So I went ahead and closed that one out. This one I did have to do a roll because, as you can see, right, if the stock was well beyond my strike, I didn't want to close it out. The possibility of the price drop, and then I get beat there. So I did do a roll order. So I ended up having to pay $1.21 to close it out, where I only collected 43 cents per share opening it. But I still ended up profiting, right, because I closed for $1.21, opened for $1.46. I did have to roll farther out because I wanted to roll up. So generally, I'm just rolling out a month each time, kind of collecting the most premium. But here, I needed to roll my strike price up because I didn't want to get assigned. And even still, I selected a strike that's in the money. It's only 2% in the money, so maybe it'll come back a little. I strategically selected I think I did anyway. I'd have to look it back up now. I think I picked the date. I don't know if I picked the date right before the earnings report so that I could still close it out and then do well selling past the earnings report, or I might have ended up on this one having to sell out past the earnings report just to be able to go up $1 and still collect the profit. But in any case, made a $25 difference in that, and it's not the end of the world. Like if I go ahead and if I get assigned, right, I let go of the shares for 15, I get to buy them again for 5. So it's a $10 difference. I only paid $683 to open that, and I've collected along the way, so that $683 is down to $591. So it would be a nice profit, but I want to try and make this profit last all the way, well, maybe not all the way to January because this will start losing value, but a couple months before it in 2027. So it would be last quarter of 2026. I'd probably be looking to roll that, but we'll see if I can keep it alive that long or if I'll just have to let it go. Either way, it'll be a win. All right, so that's our 2 poor man covered calls. Next, I've got wheel strategy running on a handful. So this one is BITO, BITO ticker. I had a cash secured put expiring on the 20th for 21. I forgot to write down where it ended, but they're pretty close. Geez, I wasn't prepared for this. So I closed that out. I went ahead and did the buy to close rather than rolling. I'm not sure why I selected that on this one because I had to pay 37 cents per share to close out those 21s. But I received 62 cents per share opening the next one. So again, another $25 difference there, profit. So we just rolled out another week, and I really wanted to roll down. I don't necessarily want to get assigned at 21. Maybe if I was at like 20, I'd like that a little bit better. But it's not the end of the world. So far, I've collected a little over $100 just selling cash secured puts at this point. Eventually, I'll end up letting the assignment go and then start selling covered calls. But so nothing major. Made $25 rolling another week. Next we have Bull, stock ticker Bull. The stock is Webull. I still have a July 11th expiration 1050 open that I collected 110 for, $1.10 per share. But I had an expiring cash secured put for June 20th at 1050. I originally collected 42 cents per share. Opening that, I closed it for 5 cents a share. So that was a nice profit. Got to keep 80-something% of the original. And I went ahead and I actually rolled it down and out. So I'm getting closer. Again, if I get assigned at 10, I'm not upset about that. So I dropped down 50 cents. That's why I didn't get to collect very much premium, only 17 cents a share. But I'm also dropping what my cost basis will be if I get assigned, bringing it down to $10. So price was at $10.65 at the time of the trade. So it was still, this trade is 6.5% out of the money. So that'll expire next Friday, and we'll most likely be rolling it again. All right, so nothing major there. We made, what, $12. IonQ, this one is my favorite to trade, but the little fiasco I'm going to talk to you about in a minute prevented me from being able to sell the next cash secured put. So I had one expiring on Friday. I sold it for 45 cents per share last week, and I closed it for 4 cents a share, keeping over 90% of the premium as profit. So far, on the year trading them, I'm making 88% annual return average, and I have profited $937 on it. My balance is all zeroed out. All my available credit and margin, everything went to zero, so it didn't allow me to sell the next cash secured put. So you'll understand why when I get there. But so I actually made no profit this week because I sold these last week, so they went into last week's profit. So I actually technically I lost $4 closing out a trade on IonQ this week, but no big deal. All right, next we have Mara, kind of pretty new on this one. So I had a June 20th $14 cash secured put expiring. I had sold it for 20 cents a share. I closed it for 3 cents a share. So again, keeping 80% of the money. And I went ahead and sold another one for this next coming Friday, June 27th, keeping the same strike price, 14. The price was currently at 14.30 when I made the order, and I collected another 34 cents per share. So I have brought in almost $50 so far and haven't actually owned the stock yet. So we'll see how that one does. Eventually, again, I'll probably get assigned on these and start selling calls. TSLL. Let's see. I'm not caught up with my graying out because we've already talked about them. All right, so we've actually talked about this last week too, because you can see the date right here. June 13th was when we closed that out. Even the one before that. All right, I either didn't make a trade or I just forgot to write it down. No, never mind. Here we go. So I sold one out for June 27th on the 17th. So that was on Tuesday. That's why I'm not remembering, because I did most of my rolling on the 20th, but not this one. That's right, because last week I closed this out and then couldn't find a trade that I was happy with selling. So then, and I think Tesla was up on Monday, so I didn't want to sell a put on TSLL. So I waited till Tuesday. Sold a $10 strike for the cash secured put, collected $28. So far, I've collected almost $200 on these TSLL puts just in a couple transactions. And again, still haven't owned the shares. Wouldn't mind it though, so I'm fine with getting assigned and selling calls too. All right, now to the fiasco that was Circle Internet Group. So let's see if you watch my other videos with Alti, you saw Circle Internet Group within them, and they lost their trades too. But let's just look. Here's the week. Let's go a little. They haven't even been out for a month. They IPO'd at $31 on June 5th. And they're now at $240. So what a crazy time. So when they exploded, where are we? When they exploded, finally on June 13th, I said, is that when I did it? Yep, June 13th. It was around like 127. I said, this is crazy, way too much, and I sold a call spread above it at 140 and purchased the other end at 145, figuring I would just take a quick profit. They ran up too much and they were gonna slow down and pull back a little bit, because that was the end of a week, right? June 13th. They proceeded to keep on running and absolutely exploded. So, having sold a 140 call with a stock that ran up to 200, that got interesting. So originally when I did it, I collected $1.05. I highlighted these in yellow just because this spreadsheet's all different stocks. It's just any spreads I've done this year. Okay, so we're just looking at the yellow circle. So last week I had sold them, expiring this past Friday. $1.05 I collected the first time, so $105 on a $5 spread. So your maximum loss would be the $3.95. But they went way against me, and I knew I was in trouble. So what I did, I actually give myself a little pat on the back. I got smart when they went way up, and I sold a put spread basically at the same strike. So I originally sold the call at 140. So now I sold a put at 140 and collected another $1.20, with the thought being these were already completely out of hand. So I'm already at the max loss, but now I can actually minimize my loss, and I sold a put spread at 140. So now there's no way. So if the stock would have dropped in order to make this put spread be a loss, then it would have turned the call spread into a win. And if the call spread that was already killing me stayed a loss, then this put spread would be free money. So although this is a losing story, I found a quick way to kind of cut my losses on it, as far as instead of making 105 but losing 500, it was a guaranteed way to basically double my credit. And that's the way it played out. As far as it never came back down. It ended, as you saw, 240, so it never came close to this. I actually closed that out. Not sure why I did. I wasn't thinking. I paid 6 cents a share, $6 to close it out. I could have kept those $6 because it wouldn't have been anything. But this isn't technically how it played out. Just I didn't get to close it out for the $5 difference. But I don't have in my chart a way to show all the different assignments. So I just made the money work properly. What happened was after close on Wednesday, I got a notice that the sold 140 call had been exercised. So now I had to sell 100 shares at 140 that I didn't have. Thursday being the holiday, I couldn't get a hold of anybody. And my other side of the spread didn't get exercised. So I go into Friday. I have a call for 145 that I can exercise, but I also have negative 100 shares of Circle, and the price was at $199. So I basically owed $19,000. So I'm getting, margin call warnings saying that, they could sell my shares to make up for the money. Luckily, I got on the phone with them. I told them I wanted to exercise the call. Only problem was, and that was pre-market, problem is on the last day, you have to wait all the way till the end of the day to exercise your option, whereas on the other days you can exercise anytime. And with Fidelity, that's who I use, there is no do-it-yourself. I can't go on their website and click that I want to exercise. I actually have to call and have a conversation with somebody and get them to exercise my option. So then I had to sit and just stress all day. But what else it did, it left me all day with zero margin and zero available balance. So I couldn't buy to close any of my options. I had to roll. So that was frustrating. And then I technically have $4,000 available, which I would have been using to sell a put on IonQ. But since I had nothing available, since I had a negative 19,000, and it actually ran up to negative 24,000 because the stock went to 240. So it was very stressful, but at the end of the day, it just ended up being the $5 spread loss because they exercised my ability to buy the 100 shares for 145. But so it just really ruined the trading day for me. So that's a pretty long story to tell you that. But so overall for the year, that basically took me back in the negative. I was doing not well at all. I'm still learning, but I was finally in the positive, and then taking that loss dropped me back negative on spreads. So I'm not done, but nice lesson learned. I thought having the call spread there, if one got exercised, the broker would automatically exercise the other just to keep everything safe. But they were perfectly fine with me just having a $19,000 negative in the account. So be careful out there if you're trading. And you're probably asking, well, why didn't you just close it out? Since it went wild and it was a brand new stock, I don't know if there wasn't enough volume or whatever. The price difference on these two, if I would have closed them out, was over $7. So I wasn't going to pay $7 a share to close out a $5 spread. That's why I was letting it go. Obviously, if I could have just closed it out for the 500, I would have. But yeah, I would have lost 200 more than the max loss, so I didn't want that. So I had to go through all that stress. So future lesson learned, don't let your options make it to the last day if you're in threat of assignment or exercising, because then you're going to basically be locked out of your money for the rest of the day before you can exercise the other end of it. So hopefully you can learn from my pain. All right, and finally, we've got our dividends. Now, I didn't have any Group B funds, so I didn't bring in anything there. And technically, since this was a funky week, you don't actually receive your dividends from them until Monday, but they show pending in my account. And just to keep things, normal here, I'll show my ulti distribution was 35.53, and my YMAX was 29.90. So we updated these, updated the prices, all my shares are updated. So far this month, including the ones I'm about to get on Monday, I've collected $452.08 in distributions this month alone. Still haven't even gotten the Nefli. Capital gains, I've lost 300 overall with these. So I've in 1 month collected 450, and my total basically, you've got my cost basis compared to the current price. Lost 300, so that's not bad, and I've made 1,700. I wasn't as focused on the distributions earlier in the year, so that's why 6 months times 450 would be a lot more than 1,700. So, all right, and I told you in the last one I would total things up. So of course I say I total things up and then have a bad week, but in dividends I only brought in $65.43 this week, and in trading I lost $120, all because of that spread going against me. So really, if I didn't have to pay $500 to close that out, this would have been a decent trading week, but I got greedy and I got bit for it. So if my dad's watching, he'll probably tell me how dumb that trade was, but that's okay. All right, last thing, dad joke of the day. I hope you enjoyed this video. It seems like people kind of like to see other people trading, so I don't, not even close, claim to be a great trader, anything like that. I just enjoy this. That's what the bio says if you read it. So when I'm providing information on YieldMax, it's not because I'm a pro. I'm literally just taking data, putting it together, and providing it for you, not because I'm something great. I'm trying to learn, trying to make money just like you guys. So, but if you like these videos, please give it a like, subscribe, all that good stuff. All right, dad joke of the day. I'm trying to get back in shape. I'm thinking of starting with lunges. That'd be a big first step. I messed that up. That would be a big step forward. I can't remake the whole video just for the joke. Sorry. I ruined it. Okay. Hope you're having a good weekend. We've got soccer tournament to get to and all kinds of crazy stuff. And I'll have videos for the other two series that I do on Sunday with your distribution guesstimates as well as the week look aheads. Okay? Have a good weekend. Bye.